Okay, folks, good morning and welcome to Swing Trading Today. I just had to check the date. Welcome to Swing Trading Today. This is Bob Desmond, and it is April the 6th, 2020. What time is it? 6:31 in the a.m., a minute late. What we're going to talk about today are first, A, my first sip of coffee. B, economic data that was released yesterday, what's coming out today, headlines, and we're going to go over the pre-market activity as well as some chart requests. I don't have many, but some chart requests. So before we begin, let me say hello, good morning to our friends over at TrendSpider. Automate your grunt work with high-tech, automated technical analysis, folks. Your competitors are using it. This is Wall Street software brought to the mainstream. You need to adopt it, make it part of the arrows that are in your quiver, and you find your winning chart setups. Time your trades with precision using their alerts. You'll see me use them today. I offer it free with my silver and gold level memberships. But if you're already a member, just go over to TrendSpider, 7-day free trial offer, demo tour, and they have a ton of tutorials. And if you need help, give them a call, use their chat. They'll help you out. 35% discount code below. Take advantage of it. Excellent tool. Great guys. I know them very, very well. TrendSpider. Proud to be a partner with them. All right, let's get to it. Yesterday, we had economic data that was released. Hey, Sam. I saw the dollar was rallying back. You're saying euro US dollar was a joke these days? Yeah. So a bit of a bounce overnight. Tuesday, before we go to Tuesday, yesterday we had the PMI for March released. Slight beat. ISM Services Index, this is more important. ISM Services Index, a big beat. Factory orders fell today by a wide mile. Factory orders fell. Job openings are set to be released today. Not much else besides other Fed heads coming out. And we have more economic data coming out later this week. Now, overnight, Credit Suisse, when the European markets opened up, they kicked things off with a warning. They're going to take a $4.7 billion hit against earnings. And this issue with Archegos continues to grow. We thought this is all over, right? But it just goes to show you, it's like a pebble that hits the water. You get these ripple effects, and you don't know who has counterparty risk, who is still exposed to all of this selling. And Credit Suisse apparently had some exposure, and they're going to get rocked. The question is, who else? So you saw a lot of selling in Viacom C shares, absolutely annihilated. It looks as though they may go lower. Bit oversold on Stokes. So the reason why I'm even looking at this is that what we're doing is giving the market, I went over this last night with Market Wrap, and I really began to elaborate on it last week, is that I'm very, very concerned about this market, how extended it is, in particular, the Russell small caps, of which we are short and remain short. And I'm reluctant to go putting on any more risk one way or the other right now until we see what happens next. And for all I know, given the ridiculousness of this market, we could very well head up higher, or we may break. We saw a lot of names yesterday close out the day either kissing or leaning into their third standard deviation Bollinger Bands. Take a look first at IWM weekly chart. Very, very extended. No new monthly high yet. This is a monthly chart. Spinning top formation last month. Sign of indecision. Not what you want to see when you're making all-time highs. Now, yesterday, we saw Microsoft. This is just one of many. Microsoft closed out the day well above its third standard deviation Bollinger Band. For those not familiar with what that is, I'll save you the technical jargon. You're not supposed to be there. Does that mean that Microsoft is going to collapse? No, it doesn't mean that. It means that it's come too far, too fast. I still think that there's probably going to be more upside here. Stokes look good. RSI looks good. That's why I don't want to go adding more to shorts. There's more fuel left in the tank here. But as we become more and more overbought, the risk reward of throwing on some bearish positions to the short side become more and more appetizing. So we'll be watching the probabilities. We're not going to be day trading this market. We're going to have a very, very strict rules-based approach and try to stay as much market neutral. But as we become more and more overbought, more and more biased to the short side, all the while generating cash flow using the sale of options, using strangles, and so on. Out of the money puts. Let's go to the pre-market activity. I'm going to kick things off with gold first for the only reason that I wanted to pull back, because given the market weakness in gold and the gold miners last week, I sold covered calls as a hedge, but there was a big rebound in the gold miners last week, so I'm kind of stuck in a position that we now need to manage. You know, it still keeps us in a profit zone, so don't feel pity for me. We'll do just fine if they get called away. We'll just sell puts against the GDXJ. But right now we're seeing gold up on the session, but it's given up a lot of gains. We were higher overnight. The question is why? And I think the reason is the dollar. The dollar saw a bit of a rebound overnight. Is this sustainable? I don't think so. But for right now, this is reality. And hopefully this gives us a pullback on the gold miners over the next couple of weeks. So that way we see some time decay. We're able to close out that position, hopefully at a profit, if not at a wash. And then we'll allow the gold miner, you like that? That's arrogance. We'll hope using technical analysis and probabilities that the GDXJ moves up higher. But I think what you could be seeing here on this 4-hour time frame is a head and shoulders setup. Left shoulder, head, right shoulder. Note the lower highs. So if you're a dollar bull, this is not really what you want to see. And it's no big deal. We could just be in a trading range right now. But if we begin to break down to new lower lows, therein lies your problem. So right now, we could just call this a flag formation. You know, how you look at charts is really subjective a lot of times. So one person that wants the dollar to crash may see this as lower highs, lower lows. If you want to be objective, you know, wait before you make that bear call. Wait till you break support. And if you're bullish, wait for your breakout above this upper band of resistance. Right now, it's a consolidation. What else do we want to take a look at? Let's take a look at the equity markets. Now, these are the E-minis, the S&P E-minis. We had a strong close yesterday. And while we are down slightly, actually now we gave up some ground, now down just shy of a 0.25 percentage point. I'm not ready yet to say that the S&Ps are done going up. Note how we held support. And what we're doing here, I think anyway, is consolidating and getting ready for another move up higher. I don't think today's economic data is enough to shake the market. If you see more banks come out and warn about this Archegos hedge fund blowing up, things may change. It always comes back to who has counterparty risk. The NASDAQ 100 down over a 0.25 percentage point. Frankly, I was rather surprised with the veracity or the tenacity of the rally yesterday, given that yields rose, but it happened. And we go into the day not as overbought, but still overbought. We left the day yesterday with RSI at about 80. We're going to open up in the low 70s on RSI. The trend is still up. Now, the Russell 2000, of which we are short. Now, we've been talking about this chart for weeks now. I've shown a lot of patience with it. A lot of ups and downs. I could have booked profits on a short had I wanted to, but I decided against it because I thought there was more downside to come. And what we've been looking at is this 4-hour chart, besides the monthly chart. Obviously, the monthly chart, that's our logic. That's our rationale for being in the trade. But the shorter term time frame that we were watching is the 4-hour chart and looking at this head and shoulders setup. Left shoulder, head, right shoulder. Here's your neckline and this nice Easter purple. And while we rallied overnight on the 2nd, we faded into the 5th. Remember, the futures market was open for a brief while on Friday on that jobs data, and the Russell in particular really rallied. But ever since, it's begun to lag, which is good for us. So now we have broken back down into this trading range yet again. I will not be adding to this position until we finally break support. And again, folks, back to our original strategy, which is at current, no new heavy directional plays at current, more market neutral cash flow generating trades until this market gives us the cue that it's done going up and ready to roll over. Now, the 800-pound gorilla in the room that nobody seems to want to acknowledge is the 10-year Treasury note. And the fact that the 30-year Treasury note, which I looked at a chart the other day going back about 40 years, is at the precipice of a breakout. Or yields, I should say, yields. And breakout to the upside. And this morning, this is again a 4-hour chart. This last 4-hour bar, which closed at 5 a.m. This is the new bar, which opened up at 5 a.m. 4:59, opened up at 5 a.m. We bounced off the lower band of support. The question is, do we hold it? If we fail to hold it, yields are going up. If yields begin to make new daily highs, watch out for tech stocks, high beta stocks. I just showed you a chart of Microsoft. Many of these stocks are overbought. The XLK is overbought using the Bollinger Bands. So they're susceptible to a sell-off. Here's one that we are involved with right now. This is a strangle play where we sold a deep out of the money put and a deep out of the money call. And we're probably going to manage this trade in the next couple of days by rolling up the untested side, meaning the put side, booking profits there and rolling up. And as we become more and more overbought, take note, RSI is at 88.72. As we become more and more overbought, we're going to book profits on a 120 put, probably roll up to the 130 put, generating more credit, more cash flow, and then buying as we begin to see topping action. Buying a near the money put option. That purchase will be offset because it's a bearish play of getting long of options. Will be offset by that sale of the 130 put. So that's a bear put spread. So this is how we're trading the market right now. Very, very mechanically. And we're just waiting for that rollover. So that's my story. We're sticking to it. NY Jets, good morning. Big Bear, good morning. Sam's busy tapping away here. Bob, have Americans had to pay tax yet? No, they extended it out for a month, Sam. Got an extension. All right. Let's do some chart requests. Franklin, ETRN. Okay, let's see what we got here. Franklin usually has some good stuff. This is a monthly chart. Interesting chart. We have a higher low. This is the value of your automated trend lines. Click of a button. Higher low. We're on the verge of a breakout here. I really like 2 points on this chart. One, $9.02. Two, $10.75. Weekly chart. It's early in the week. I think what we're probably going to do is we're probably going to bounce back. We're doing another retest of the breakout point. We broke out here the week of March the 22nd, pulled back last week, retested, rebounded. Even though we closed down, it's okay. We're just retesting breakout points. This is traders like me. I have it. OCD, obsessive compulsive disorder. You want to see a breakout. You're still nervous that what was resistance may not act as support. You wait for the retest. You got it. Sometimes they come in pairs. I think that's what's happening right now. Rough day yesterday. Got to say that. I want to say we held this automated trend line here, but we didn't. We closed just below it, but we have a bunch of moving averages, including one volume-weighted moving average, which has been acting as support. So let's see whether or not we bounce back. So what I do here is, I want to first know, are we able to break out again? No sensitivity. I just care if we close out, so I'm going to use a 4-hour bar. You only get 2 of those in the day. All I care about is a breakout. And that's it. If we continue lower, I don't care. It's not on our radar list. So if we manage to recapture the support level, now resistance, good stuff. Then we'll look to get long of it. Rules-based approach. Let's see what else we have here. I think I have one more. Oh, Baidu. BIDU. Okay. Again, let's go with the monthly chart. Let's clear all these off. Okay. So far this month, we have an inside month. No new high, no new low, which is good to see. We had an alert set. Let's reinstitute this. In fact, I want to set this alert on a weekly chart. Let's cancel this out. Let's go to a weekly chart. I get more selections for time. Oh, this is nice. More selections for time frames on a weekly chart. Go with a 30-minute time frame. Interesting play. I'm not big on the mainland Chinese stocks. But if we get a pullback to support, we could put a tight stop below. That becomes interesting. I'm going to want to go to the seasonality chart in a moment. We'll leave off with that. Right now, we're flirting with support. This is one where I'd like to see a pullback in a higher low, a W formation form. Because many times what you get here are these dead cat bounces, and then they roll over. I'm not saying that's going to happen here, but for peace of mind, I'd like to see us pull back a bit further, either A, tap this support level where I have the alert set, or trade somewhere above it, putting in a higher low consolidation. And then what you're looking for is a breakout above this potential pivot point at 227.74. So it looks interesting. I would like more of a pullback, more of a running start in advance of a challenge of resistance up here. We're a little bit too close. Were I long? Would I sell? No. But would I initiate a new position right here, right now? Not yet. If we broke out, I would. 4-hour chart looks interesting. We did break out yesterday afternoon on Baidu on a 4-hour time frame. A little bit more volatile of a time frame than the daily chart, obviously, but it looks pretty good. So I may not get what I want here, but it pays to wait. Set your alerts. Let the software work for you. And with that, folks, I'm going to say I have one more to go over for NY Jets. Riot blockchain. Daily chart looks good. We'll come back to it. Beware of resistance up here and why. Here's your automated trend lines. And this resistance level has acted as stiff resistance since February. Weekly chart. Let's overlay that monthly resistance. Here it is, right here, on top of a weekly time frame. Now, if you break out, that would be very attractive. It's a very nice consolidation. Keep this active for a while. Now, another way of looking at this is this way. Here's your lower band of support at around, let's throw a number out there. Let's call it $47. Again, 10 days will keep it active. It's an interesting chart. I think ultimately it's going to get resolved to the upside. We're probably going to break out here. Daily chart. First thing that jumps out at me here are the ever-tightening Bollinger Bands and this ever-tightening wedge pattern that's setting up. It's a good-looking chart. Too close to resistance to open up a position. Too far from support to open up a position. If you want to split the difference, which I wouldn't do, I'd wait for it to either break out or pull back to my support level. Here's another support level at around $50.62. You're welcome, NY. And with that, folks, please, everyone have a very profitable trading day. I'll talk to you soon. Thanks for joining in. Be well.